Hello and welcome to this course on technical analysis in the cryptocurrency market powered by Covesting, the leading Euro-based cryptocurrency trading platform. In this video, we take a look at the principles of technical analysis. We'll look at what is technical analysis for, how does it work, and how can we use it to help our trading. So what is technical analysis? Technical analysis is defined as the use of price charts to study market action with the aim of predicting future price trends. Market action refers to market information derived from both price and volume. Technical analysis is hinged on three basic principles. The first is that the market discounts everything. The second principle is that prices tend to move in trends. And the third principle is that history repeats itself. I will explain these premises one after another, but let's take a look at the first one, which is the market discounts everything. When we say that the market discounts everything, it means that any influence from psychological, fundamental, political, or volume factors can all be captured in the price action. So the market technician focuses solely on the study of price, which is the end product of all of the interaction of the factors mentioned earlier. Price action is a function of supply and demand. Basic economics teaches us that prices go up when demand outstrips supply and prices fall when demand is lower than supply. The technical analyst does not need to study the various forces of demand and supply, as it is not interested in the reasons the market rise and fall, but it's interested in the outcomes. This brings us to the second tenet of technical analysis, is that price moves in trends. When we say that prices tend to move in trends, we mean that price can assume a direction and persist in that direction for a long time, unless, of course, it's constrained by factors of supply and demand to do otherwise. This means that when price is rising, it will keep rising for quite some time, and when price is falling, it will continue to go down for some time. However, trends don't last forever, but they do provide for opportunity for the prudent trader to ride the trend with their trades and make profits from the price movement. In other words, the trend is your friend until it ends. The technical analysis seeks to identify areas of trade entry that can ride the trend profitably for as long as possible. Thankfully, a trend will always present such opportunities because trends do not move in a straight line. No trader can predict the start or end of a trend, and that is why traders enter and exit the trend at various points. There will be pullbacks, there will be earlier entry trader taking profits that coincide with these pullbacks. You can see that in this chart where price has been falling for some time. This is the daily chart for Dash Bitcoin on Covesting's platform. This is a perfect illustration of a downtrend with three instances of upside retracement. You can see that we fell, we retraced, we fell, we retraced, and we have fallen again. These are various points where traders will enter and exit the market. So why does history repeat itself? Well, history is created by human actions, which are a product of human psychology. It's been found over time that human behavior does not change. Put a human being in a situation and watch that person's reaction. You'll find that another human being put into the same situation will exhibit the same, if not a similar, response. The same thing happens in technical analysis. When market participants and investors are faced with a market situation, time and time again, they tend to respond the same time and time again. This causes history to repeat itself. Therefore, if actions have been taken and have produced certain results in the market, it's expected that a repeat of those actions could end up producing the same results. History repeating itself, or at least the likelihood of it doing so, has given rise to chart patterns. A double top chart pattern ends with falling prices because buyers quit after pushing prices up twice. You can see the double top on this chart and how price continues downwards once the buyers had exited the position. As a technical analyst, you only need to know the outcome. You simply need to know that the sellers gave up. It's not the why, it's the what that matters. To summarize, technical analysis is the use of price and volume charts to study market action so as to be able to predict future price movements of an asset. Technical analysis is based on 3 tenets: history repeats itself, price moves in trends, and markets discount everything. Next time, we will present another interesting video which covers another aspect of technical analysis. Goodbye for now, and see you next time.